Welcome back, savvy investors. Are you ready to dive into the exhilarating world of stocks and figures? Buckle up, because today we're taking a wild ride through the financial galaxy of Texas Instruments Incorporated. Hold on to your hats, because this is going to be one heck of a journey. So, let's kick things off by turning back the clock and checking out the price-to-earnings ratio over the trailing 12 months. Clocking in at 23.40, it's been dancing around the campfire, averaging 22.18 over the last 5 years. That's a pretty steady beat, right? Now, let's grab our crystal balls and peek into the future. Forward-thinking investors, rejoice. With a PRFWD of 25.98, the forecast looks promising. Keep those eyes peeled for what's to come. The price-to-earnings-to-growth ratio or PG ratio, our trusty compass pointing towards growth opportunities. At 2.34, it's like finding a treasure map with a big, shiny X marking the spot. Remember that a value around 1 is when a stock can be considered undervalued. Ever wonder who's pulling the strings behind the scenes? With insider ownership at 0.23%, it's like catching a glimpse of the puppet master's hand. But wait, who's really calling the shots here? Time to unleash the powerhouse trio: return on equity, return on assets, and return on invested capital. With figures like 41.15%, 21.75%, and 25.41% respectively, Texas Instruments is flexing some serious financial muscle. These numbers indicate how efficiently Texas Instruments uses its shareholders' equity and company assets to generate earnings. Earning per share, the golden ticket to investor nirvana. At 7.07, it's like hitting the jackpot in the stock market casino. But what about the next 5 years? Over the next 5 years, it is expected that will continue growing at 10% annually. Fasten your seatbelts, folks. We're about to embark on a wild ride through the highs and lows of earnings and cash flow. With a positive evolution over the last decade, things were looking rosy until bam! Texas Instruments' new factory plant sent everything into a tailspin. It had a huge drop because Texas Instruments needs around $5 billion capital expenditure each year until 2026. For all you dividend aficionados out there, rejoice. With a dividend yield of 3.15% and a whopping 15.92% growth over the last decade, it's like hitting the jackpot at the dividend casino. And don't worry much about its free cash flow payout ratio over 100%, because this problem is due to the new factory plan commented above. Welcome to the profit playground, where operating margin and profit margin reign supreme. At 41.85% and 36.97% respectively, Texas Instruments is basking in the sweet scent of success. But can they maintain their stronghold in this cutthroat market? Over the last 8 years, it has had a positive evolution of revenue and earnings. It's like they're making every penny count. So this situation has been translated at all to its market price, obtaining a little bit lower total return than VO during the last 5 years. Now let's continue about financial health. Texas Instruments ain't sweating it with a debt-equity ratio of 0.70 and long-term debt equity at 0.66. It's like they're keeping their financial house in order. Gaze into the crystal ball, dear investors. With an average price return of minus 5.93% over the last 52 weeks, it's been a bit of a roller coaster ride. But fear not, for the analysts have spoken, predicting a price of $169.89 in the next 12 months. It's like glimpsing into the future. Or is it? With a fair value of $158.02, are we about to witness a market shakeup? That was quite the whirlwind tour of Texas Instruments Incorporated. So, what's your take on the numbers? Are we on the brink of a financial revolution, or is it all just smoke and mirrors? If you enjoyed the video, don't forget to like, share, and subscribe for more financial adventures. Until next time, happy investing.